NIO has been on a roller coaster of emotions in the past few weeks. One week we have terrible news like Chinese electric car startup NIO shuts factory for 5 days due to global chip shortage, followed by a few days later with NIO stock is rising, strong deliveries are just part of the reason, and catalysts like NIO to showcase ET7 sedan at Shanghai Auto Show later this month. So which one is it? Is it doomsday for NIO in the short term, or are we going higher? Let's go over NIO's latest news, catalysts, and price targets. If you're invested or thinking of investing into NIO, you don't want to miss this. If you enjoyed this video, make sure to like, subscribe, and hit the bell to get notified for my latest videos. If you want to get 2 free stocks, try Webull. Get 2 free stocks when you deposit $100 or more. To get the most up-to-date high-growth stock news, my latest buy and sell alerts, and smart money market sentiment, check out my Patreon. It comes with private Discord and a full range of server benefits. All the links will be below under the description of this video. Let's kick off this video with the most recent catalyst. On April 3rd, this article was released, NIO to showcase ET7 sedan at Shanghai Auto Show later this month. Chinese electric vehicle maker NIO unveiled the NIO ET7, the company's first flagship sedan, at its annual NIO Day event on January 9th. The company will showcase the model at the upcoming Shanghai Auto Show at the end of this month, April 19th through April 28th, with interior details expected to be open to the public for the first time. NIO announced that the first production line body for the ET7 went off the production line at its Hefei manufacturing base on April 1st, setting the stage for the vehicle's scheduled delivery in the first quarter of 2022. William Li, founder, chairman, and CEO of NIO, unveiled the NIO ET7 sedan and said that the model was available for pre-order. NIO has never disclosed the number of orders for the ET7 but has said several times that it exceeded expectations with more orders than previous cars. The car will be equipped with a future 150 kilowatt solid-state battery with an energy density of 360 watt per kilogram and a maximum range boosting up to 1,000 kilometers. This is one of NIO's most recent catalysts with big anticipation that can move the stock higher in the short term. Let's look at their promotional video. Nice, pretty slick video. In contrast to this good news, on March 26, this article was released. Chinese electric car startup NIO shuts factory for 5 days due to global chip shortage. NIO stated that it will be shutting down its factory for 5 days due to the global shortage in semiconductors. It now expects 19,500 deliveries for the first 3 months of the year versus a previously announced forecast of 20,000 to 20,500. The chip shortage comes from the impact of the pandemic and trade tension between China and the US that began under the Trump administration. Even with this reduction, NIO is expected to deliver more cars than rival XPeng and Li Auto. Less than a week later, on April 1st, this article was released. NIO stock is rising. Strong deliveries are just part of the reason. The Chinese electric vehicle maker NIO reported its March deliveries Thursday morning, turning in a result that was better than it had warned investors to expect just a few days ago. News about an effort to resolve the global semiconductor shortage is another positive factor. NIO delivered 7,257 vehicles in March and more than 20,000 vehicles in the first quarter. On Friday, NIO offered guidance indicating that it will deliver fewer than 7,000 vehicles in March and 19,500 for the entire quarter. The final few days of March must have been better than expected. NIO stock was up almost 5% in pre-market trading. NIO offered the downbeat guidance last week because of the global automotive semiconductor shortage, which is roiling companies from Toyota to Tesla. Plants at Ford and General Motors are sitting idle while the industry essentially waits for the parts. The problem is beyond NIO's control. NIO stock is down about 20% year to date, falling more than 16% in March as more automakers shared news regarding the impact of the shortage. The delivery news has shares higher, but some semiconductor industry is helping too. Taiwan Semiconductor Manufacturing, TSM, the world's most valuable microchip maker, has a plan to end the semiconductor shortage. It is planning to spend $100 billion in capital over the next 3 years. TSMC is entering a period of higher growth as a multi-year megatrend of 5G and HPC are expected to fuel strong demand for our semiconductor technologies in the next several years. The pandemic also accelerates digitalization in every aspect. TSMC has spent about $17 billion a year on average for the past few years on its plants and equipment. The largest semiconductor makers around the globe, including TSMC, has roughly $55 billion in capital spending in 2020. No matter how investors slice it, $100 billion is a lot of money for the chip industry. While the delivery news is the most immediate positive news for the NIO stock, investors should also be happy that a long-term response to the parts shortage is in the works. What a roller coaster of negative to positive news. The stock market never seems to surprise me. One week it's the end of the world and the next week it's dismissed with positive news. Just chopping up those paper hands. Let's take a look at some price targets to see where we are going from here. In my last NIO update video, I went over these Armageddon levels that seem unlikely for now. After NIO broke down my 3950 level, the next level of support I was anticipating was at 2550, and if the carnage continued, we would be looking at $17. Fortunately, NIO created a nice support level here at $35. We can see NIO here with some wild swings based on the wild negative to positive news, with a $11 swing. On Thursday, the stock closed at $39.66, just a hair away from my $39.50 level. What we want to see in the short term for NIO before we go higher is hold this $35 level. This is a huge support level. If NIO can maintain this level, it will show a sign of stability. Now for the upside, we want to see NIO break through and close above the $46 level for a nice bullish indicator. For now, we're stuck trading in a $11 range between $35 and $46. Now here comes the good news. 44% of NIO shares are being held by institutions. I'm not going to go one by one on the recent institutional buying since there's way too many. Since the beginning of April, we had a lot of new funds buying into NIO for the first time or adding into their position. We are talking about close to 100 new positions. The most recent buys come from funds like Vanguard, Invesco, and BlackRock. This is as solid as it comes. The current short volume ratio is at 25%, which is noticeably high at the moment, but the big institutions continue to buy. Overall, I see NIO extremely bullish based on this information. It seems like the institutions are holding the line at the $35 price target. I like this stock and I see positive bullish price action for NIO in the near future.